Good morning and welcome to today's edition of our weekly market update. Today is September 19th, 2022. We have a little bit of a volatile market last week, and anyway, lots of things going on and lots of things to kind of catch up on. But let's jump in, and the primary thing that we're looking at this week is just inflation, where it's been, what's happening, and kind of what our anticipation is with inflation going forward. This chart here that we're looking at is a month-by-month indication of what inflation has done month over month. So for example, this isn't the total inflation for the year. This is just the amount that it increased from last month to this month. So this is core inflation. It went up 0.1%. The problem with that number that surprised everybody is that everyone thought that inflation would do a continual decline for a while, and where it ticked up a little bit, it kind of spooked the market a little bit, and it looks like that the Fed is going to continue to be aggressive in their rate hikes. The market is priced in pretty much another 75 basis point rate hike here coming up shortly, and that's most of what the volatility was that we saw last week. That was hopeful from the market standpoint that inflation would be coming down a little bit, and we could get back on track with some longer term growth projections. But until we get inflation put to bed, it looks like that the market is going to continue to be a little bit volatile for us going forward. So here's kind of the things and what we're seeing, and just kind of a look under the hood. So year over year, inflation did go down from last month's report, went down to 8.3, was up to 9% last year. So it has come down. Energy prices year to date, again, have come down 5% decline since the first of the year. So we are seeing some deceleration of some pieces of inflation. But the problem is that some of the pieces of the headline inflation, for example, food prices rose 0.8% during the month. Core figures, which exclude food and exclude oil and gas and fuel and energy and those type of things, that also rose 0.6% in August and 6.3% year to year. So in the details, the core services outpaced inflation in core goods and shelter costs. We can see here on this chart that shelter continues to be a little bit of an ornery spot in the economy with regards to inflation. It is not coming down yet. We can see, however, one of the bright spots that we have is commodities have come down substantially. Well, substantially for the month, a negative 0.8%. So we are seeing pieces of inflation come down. We just haven't seen all of it come down yet. And with what's going on and what's happening, the key is that these core inflation type of scenarios, looking at the CPI basket, account for about 40% of the CPI. So until we get those under control, I think that the Fed is probably going to continue to be aggressive in raising interest rates. So the futures market responded last week with the responding to the 75 basis point rate hike from the Fed's meeting. And what this is telling us is this. Number one, it looks like that inflation is coming down, but we don't know the timing on it. And we don't know how long it's going to take before it gets under control. But the Fed is being very aggressive in making sure that this gets taken care of and gets tamped down. But what this does to the market is it widens the gap of potential returns. So if inflation, in our next month's review, if inflation has gone down a bit, you'll more than likely see a pretty good bump on the upside in the marketplace. If inflation still is persistent, we're probably going to see a little bit more downside. And we don't know where it's going to end up. It just kind of depends upon how the economy responds to the rising of the interest rates and everything else. But for all intents and purposes, it looks like that it shouldn't be too long before this gets under control with how aggressive the Fed is becoming. So from a long-term perspective, from a short-term perspective, what we're looking at right now is just We're trying to take a little bit of risk off the table, but at the same time, we are staying invested long-term, because that's one of the 7 principles of long-term investing, is just stay invested when these types of things happen. So we will keep you in the loop and keep reporting as we see things happening. And with that, thank you for listening, and we appreciate you coming and visiting our site on a weekly basis. Thank you so much. Bye.